easily make £1 million tax-free every year. So we're saying the mortgage amount is £195,000. The mortgage interest rate, 5%. Net profit, you're probably looking at about £6,000. Now let's go to higher rate taxpayer. Your taxable is the full whopping 13,716. Now the question is, do you buy that house in your personal name or a limited company? Welcome to Property Investing with Abi. On today's episode, we're going down that argument. Is a limited company best to buy property in, or your personal name? So we're going to be looking at that on the whiteboard and working that out. One of the things that I've learned over the last 5 years while I've been investing is mortgage companies only like you to put about 5 buy-to-let mortgages in your personal name. This argument is irrelevant if you want to be a big portfolio landlord and have 10, 15, 20 mortgageable properties, because you're going to need a limited company for that. But right now, let's just focus on the tax. And let's look at an individual and a lower rate taxpayer, individual, higher rate taxpayer, limited company, and see what comes out. So we've got this house here. And as a landlord, we're going to buy this house. So we're going to say this house is a UK average of 260k, which means a 75% buy-to-let mortgage. So at 75%, your mortgage is going to be 195,000. Now we need the rent. So the average UK rent is around 1143. There we go. And then the interest rate right now, we're just going to use 5% as average. You can get it lower, but we're just going to use 5%. So there's our stats. Now the question is, do you buy that house in your personal name or a limited company? And this depends on what level of tax you are. So we have the lower rate taxpayer. I'll call them LRT. We have the higher rate taxpayer. And we have limited company. So what I'm using is I'm going to use UPAD. So UPAD has a Section 24 calculator and it will look at all these. So we're saying the mortgage amount is 195,000. The mortgage interest rate, 5%. Now, annual rent, we have, and I can't do that in my head because I'm not that clever, 1143 times 12. So that's 13,716 a year. 13,716, that's the rent. There we go. Now, individual basic rate taxpayer, the taxable profit for you is 3966. 3966. Lower rate taxpayer. So on that, giving you 13,716. Obviously, you'll have mortgage payments out of that. You'll have maintenance, insurance, etc. Net profit, you're probably looking at about £6,000. Lower rate taxpayer, your tax is 3,966. Now let's go to higher rate taxpayer. Your taxable is the full whopping 13,716. So what it's basically saying for a higher rate taxpayer, we're not going to tax you on profit, we're going to tax you on the gross rent coming in. So now we're going to go over to limited companies. So a limited company, look at this, 3966. Now clearly, the best one in this has got to be limited company or if you're a lower rate taxpayer. Now the challenge is, if you're a lower rate taxpayer right now, but you buy 5 of these, it's going to bump you up anyway. So it might be better to put that in a limited company, unless your earnings from this is going to stay under the lower income bracket. Now there's lots of benefits of being in a limited company. One of the biggest benefits, as well as knocking out Section 24, which it does, is it ring fences everything. When you're a new property investor and you do a mortgage in a limited company on a property, they want you to sign a personal guarantee. And a lot of people get upset about this and they're like, oh my God, I might as well have bought it in my personal name. But actually, the guarantee in the limited company is limited to this. Whereas in your personal name, the challenge is not only can they come for this, they can do you for other costs and lots of different things as well. So I always like a limited company because it ring fences you. You can also be really, really tax efficient with the profits in a limited company. So for example, you can put other costs in a limited company that help you run the business. And if you don't know what you're doing, you need the training. But there's lots of different things you can do in a limited company to be very tax efficient. Lower rate taxpayer, yeah, keep them in your own name. You will pay a lower interest rate, but you want to be careful because you don't want to go into the higher rate tax because they're gonna do you, aren't they? Limited company for me would be the winner because I want to be a portfolio landlord. I want a lot of property. I want the ring fencing, the safety of a limited company, and I like the tax efficiency of a limited company. And I'm planning to grow my business quite quickly. And what I found is when I raise joint venture finance for my properties, they like limited company. It shows you're professional and you know what you're doing. But go to UPAD, really, really cool website, and you can work it all out. So I talk to people all the time about profits from their portfolio. And I tell people you can legally make £1 million tax-free every year. And they look at me gone out. I say the amount of profit that you keep depends on your level of knowledge of tax, company structure, and capital allowances. So if you want to be really tax efficient, really savvy, you want to build a property portfolio, you need to come to Wealth Through Property. We're going to give you all the knowledge and advice and everything you need to help you smash your property portfolio and keep more of your profits. This event is game changing. Make sure you get your ticket. So if you haven't already, subscribe to the channel because you don't want to miss any of this. Like the video, comment below and tell me what you think. What's going to be the strategy for you?